AMC stock and the broad markets itself continue to strangle the shorts in AMC because a lot of these hedge funds have more than one position. It's not just in AMC stock. One of the top favorite stocks heading into 2023 was none other than financials. And financials have been the worst performing sector since the start of 2023. So it looks like their long bets are losing, their short bets are also losing, and in mark-to-market losses, short sellers are down about 80% in 2023 alone, not to mention the cost to borrow fees. We have some new numbers on this that we are going to get into here in this video, but long story short, you want to boil this whole video down, looks like margin calls are coming, and they could be coming more aggressive than a lot of people do realize. And that makes for a lot of opportunity heading into tomorrow's big day with AMC. So we'll get into everything that I just mentioned, as well as talk about what's important today and after hours that could continue to fuel a lot of these margin calls. So, ladies and gentlemen, thank you guys for watching. Hit the like button and subscribe to the channel. If you guys also want to trade with me live in real time, link down below in the description of this video. We are making a trade on AMC. We have a couple earnings trades here in after hours today as well. So you guys definitely want to be a part of the action over there. Nonetheless, let's dive into it, guys. First thing you want to pay attention to, markets. S&P 500 down about 0.75%. AMC stock up 3.31%. It is the best performing stock in my portfolio today. That tells you something. And I think it speaks volumes heading into AMC earnings, which are going to be tomorrow. Because if AMC, they're not selling off into earnings, they're actually ramping up higher. And someone somewhere usually knows something when it comes down to earnings reports. So in a weird way, I've noticed this a lot throughout my years of investing and trading around earnings. If a stock goes up into earnings, it tends to have pretty good earnings, right? Now, if the markets take that as positive or not is another question, and that really comes down to the forward-looking guidance, how AMC is going to talk about the next quarters of their business. But I think more importantly with AMC this time around, is really the state of the balance sheet. Adam Aron came out on Twitter and touted AMC's strong cash position. Well, how does that cash position look? Did we lose less than what we were expected? That's a very big deal, because just losing, 10 million, 20, 30 million less than expectations can mean AMC can survive for, a couple more months or a couple more quarters than what people are expecting. And the sooner they get to a free cash flow positive, the better it's going to be. And if we get some kind of guidance along those lines, that's going to be exceptionally bullish. So I think that's going to be the biggest driving factor of AMC, as well as how they're doing with their popcorn business, their variable pricing for their seats. That's something we heard about last earnings. Does that improve this earnings? Probably. Last quarter in Q1, you got a couple films that were pretty big that went to theaters. Most notably, Avatar: Way of Water is, I believe, the third largest film of all time now. And that was also mostly captured in Q1 2023. So we got a lot going for us here. AMC stock looks very strong, but let's focus on this margin call situation, because hedge funds, they usually don't just own AMC. That would be a very odd hedge fund to only have a position on AMC. A lot of them carry stocks that are correlated with the broad markets. Some of them are technology-based, some of them are dividend-based, right? There's different kinds of hedge funds, but by and large, they own a lot of the same things. And even financials heading into 2023 was the top praised sector to be a part of. After all, the Fed is raising interest rates. In a typical bank business model, the higher rates go, the more banks should make on excess reserves, right? That's why a lot of people like the banks. Well, not so fast there. Banks have been the worst performing sector by far in 2023. This is hurting them on the long side of those positions, which is pretty sizable. There's a lot of institutional investors in bank stocks, not even just regional, but large bank stocks that have also not done well at all. On top of that, most recently, you were seeing Apple stock down about 1% today, heading into their earnings and after hours, which could be a big make it or break it for some of these margin calls, for some of these hedge funds in some of these short positions, because in my personal opinion, they use AMC and heavily collateral size stocks like Apple to stay in their AMC short positions. Hedge funds have lost 80% just on equity mark-to-market losses in Q1, which is about $450 million. Well, the cost to borrow fees have killed them another 150%. Their capital is coming from somewhere. Now, when there's unlimited risk in shorting a stock, you either have to hedge out your trade, you have to cover on your trade, or you have to put up more collateral as that short position continues to work against you. And I don't think shorts are covering. I think that's pretty clear. I don't think they're putting up cash to fund these positions. I think they're putting up collateral. Who wouldn't take something like Apple stock or the S&P 500 index as collateral? Now, there's margin requirements, right? As AMC stock moves up or down, or as Apple or any of these stocks move up or down, there's different requirements, right, that have to be placed for these short positions. But by and large, everywhere I look, it looks like margin is getting higher than ever. Now, margin debt has actually been dropping, but margin debt is heavily kind of evaporated in retail portfolios. We have the data on this. Retail is not using nearly as much data as institutional investors are. So even though the margin debt as a whole has went down, a lot of it is because a lot of retail stocks have since dropped 95%, and retail has gotten out of margin a long time ago. Institutional investors, on the other hand, they're not so much getting rid of that margin debt, and that can, as you guys know, compound losses to the downside. So I think something big to pay attention to today. AMC stock is up about 3%. S&P again down about 0.75%. Pretty rough day. Apple down about 0.80% heading into their earnings. A big part of the day today, a huge part of the day today, is regional bank stocks dropping pretty big. The regional bank index is hitting another new low, down about 5% on the day. Again, squeezing shorts, that collateral crisis getting worse, margin calls getting closer. And I think that's another reason why AMC is positive, right? Like I said, you either have to hedge out your short position, you have to pledge more collateral, or you have to cover on your short position. I don't think shorts are covering. I think they might be pledging more capital, and I definitely think they're hedging out their positions heading into earnings. Now, not enough of them are obviously hedging out their positions. You'd see a bigger rally in AMC stock, but that's going to make for that post-AMC earnings, really the trading day tomorrow, as well as next week, probably so good for AMC. Now, keep in mind, I'm not a financial advisor, I'm not a financial planner. This could be wrong, and AMC could go to zero tomorrow, right? Just to be dramatic. Odds are it's not going to happen, but I got to give you guys that disclaimer because it's not a home run trade. Even if everything looks bullish, which right now, everything does look bullish going into AMC. I really can't make a bearish case for tomorrow. I can't sit here and say that AMC is up 3% on another strong green day looking to break out again. I can't make a bearish case on that, but anything can happen, especially when you're talking about AMC. So again, regional banks, that is big news today. Wall is down like 40% still, 31%, 32% in that range after there was rumors that they were going bankrupt and looking for strategic options, which is usually short for we're going bankrupt and we need to sell assets from our company. So you kind of have that dilemma going on today. It's kind of been rebutted. Western Alliance said that they will essentially come out and pursue legal action against Financial Times and other people spreading that false narrative. But you really don't know until you know. And that is causing a lot of fear today. Apple, obviously, it looks like Chinese citizens are not buying as many iPhones or handheld devices. We've seen that prevalent in Qualcomm's earnings that did come out. So Apple going down a little bit today, but not nearly as much as what could happen if their earnings are bad. here in after hours. And you're going to get Apple, Block, Coinbase, DraftKings, Lyft, Fortinet, Carvana, and Booking Holdings. The only other trade I do have out of these is Carvana. I think Carvana is in a very bad situation heading into their earnings. They lost about $800 million last quarter alone. And at the end of last quarter, they had about $900 million in capital. So either way it looks like you're either getting a big capital raise, which would dilute Carvana, or you're getting a possible announcement of bankruptcy. I would be very surprised if they don't, say any of those two things. The numbers wouldn't really make sense at that point. So there you have that. Now, as far as what's currently going on with AMC stock, let's go ahead and refresh this. Live short interest, 25.25% short interest off free float, 130 million shares currently sold short, 328.5% cost bar average, cost bar max 336.39%, cost bar minimum 320%. Interactive Brokers has the short availability at about 1 million shares that can be lent out with a cost bar rate of about 172%. If we take a look at the option activity, you have seen 12 orders totaling $20.5 million positive order value of 13% on the day, which is actually a lot better than the weekly average of 4% positive. So today is definitely a lot better than what you typically do see. And I think that is also very interesting. The volume ratios today on the call side is 62.7% calls. The volume on the put side is 37.3% calls. So again, it looks like some hedge funds are trying to hedge out their positioning. Now, if we take a look at this article that I was getting some of those stats from earlier in the video, AMC, April's most profitable stock for lenders. What does that mean? This was the most profitable stock for lenders in the whole month of April. And that is because the cost bar rates reached as high as 970%, obviously due to this arbitrage trading. And it says, according to DataLend, a firm that monitors trends in the securities lending market, AMC Entertainment topped the global lending market in April. It generated about $99 million in revenue for lenders during the month, and it says fees remained at about 200%, still extremely high. And it goes on to say that overall the securities lending market reaped $1.05 billion in revenue in April. That means out of every stock in the market, right, that is, because they all have shares that get lent out, AMC accounted for about 10% of all of that money out of thousands of stocks on the market. That hurts. That is hurting shorts huge. That's massive. Just think about that. AMC's one stock. Out of the whole entire markets, AMC's cost to borrow fees accounted for 10% of the total fees that were paid in the lending market. That's absolutely insane. Now, it says so far in 2023, short sellers have lost about $417 million on their short positions. That is not including the cost to borrow fees, which were about $2 billion in Q1 of 2023. So all in all, either way you put it, it not a good situation, right, for shorts. And I'll be on the lookout just to see what happens by the end of the day today and to finalize some of the trades that I have made. Again, if you guys want to come join me and trade with me live in real time, link down below in the description of this video. Thank you guys for watching, and I will see you in the next one.